The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, boys and girls. I'm down here with the Sheilas and the Blokes in Sydney, Australia. They even speak some form of English down here. I'm not sure exactly what it is, but when they tell you it's only one or two streets over to the left or one or two streets over to the right, they're doing that on a geometric logarithmic scale. That usually means a 45-minute walk. So remember, if you ever get down here, make sure you look at the map and see how long something happens to be. We want to know what the length is. Anyway, we have a very interesting day today. We're making new highs in the Dow Jones and the S&P. We have not made a new high yet in the NASDAQ. It's only a few points away, of course. And then we also have not made a new high in the New York Stock Exchange Index. That's not even close, nor has the Russell, but that's neither here nor there. I will post some charts here in a bit, but I wanted to talk a little bit about what's happening in the world as far as history. If you remember, November 9th, 1989 was the fall of Berlin Wall. I remember that most vividly because it was a huge astrological date. I believe it was a Saturn-Uranus conjunction, and I had put in my newsletter that I was writing on astrology at that time about the importance of this date, and that if it was not on every page, on the front page of every major newspaper in the world and the headline on all the TV programs on that date, I said I would give everybody a free year subscription. Well, it happened, didn't do anything to the markets. They didn't even move at all with that. You'd think it would have been bullish, but they didn't. And they was still bouncing back from the crash of 1987, and it was on its way to 17,000, but it did very little to the market, yet it was one of the most important days in all of history. Anyway, that's neither here nor there. That just basically tells you that sometimes these things really surprise you. The thing that I'm interested in today more than anything else is that after going over these all these charts over the weekend, and I've had a great deal of time to spend on all the charts, it's just really amazing how many T6 patterns we have going. This is the Triangle 6 pattern in Gartley's book. I believe it was around page, I think it was around page 216, 217, something like that, where he had it marked. And he referred to it as one of the more accurate of all of the patterns that you had. I found it to be, better than, 90% accurate. And we're having it in so many things today that I wanted to share those with you and give you an idea of what's really going on. I mean, it's just really amazing. If this fails, then this will go down in history as the day that, technical analysis really took it on the chin this week. Making a new high today really means nothing because it made it by a very small amount. If it were skyrocketing and we were, up 200 points in the Dow, something like that, then I would say something, really significant is occurring. But with this small action today, it really is not very much. The other thing that I wanted to mention is that there is a possibility here that we could be in a currency war going on. I'm not quite sure yet if it is, but we're starting to see a few signs of it with what happened to the Japanese yen the other day with the Japanese market, and I wanted to share some information on that with you. But first, let me go through some of the charts that I think are relatively important. By the way, if you have any questions, it's 877-927-6648. I'll be happy to answer them if I can. So the first one we're going to look at here is we'll switch courses a little bit, and we'll move over to the real estate market. And I wanted to post into the room here. We'll see the, give me 1 second, and I'll get it ready. This is the IYR, which is the Real Estate Investment Trust. It is also forming a very large ABCD pattern that goes well back over 2 years. And here again, you're seeing this 1, 2, 3, 4, 5, the expanding triangle pattern, and it's very symmetrical. That's the one thing that you see with these. They're hitting actual, really important fib numbers, and that's something that you need when you have something like this really occurring. So the other one that I wanted to mention to you was the New York Stock Exchange Index, because we're having the third biggest divergence. We've had two, which we've never seen in history. Now we're having the third one coming in today, and so it's going to be real interesting. We are a tad above the 786, but statistically it's not enough to really make any difference, in my opinion, because it's only 30 points on an index that's almost 11,000. So we'll take a look at that. I've been asked to take a look at the grains, but I'll do that later in the show, folks, because this is, I think, we're at such a critical point here in these things that you got to pay attention to it. I don't know if these are not going to work or not, but boy, there's so many of them that are here that it's absolutely scary, to see that. I don't know if you realize this, but the NASDAQ has been at the same level here for well over 6 trading days. We haven't been more than 10 points away in the NASDAQ for the last 6 trading days, and it still has not taken out the highs that we made back on the 5th of November. And we've come close to that today, but we still haven't done it, just like we did Friday. So all of these are telling us we have another one of these same patterns, these T6 patterns in the NASDAQ that we have right here. And it's doing the same thing that all the others are doing. I'm going to go through these one at a time because there's so many of them. I mean, there's just, I never remember seeing this many. And I've been looking at charts for well over 50 years. So, we'll just look at them one at a time. The next one we're going to take a look at is the IWM, and then I've had a request to take a look at Apple, which I certainly will, also showing the same pattern. IWM, we'll bring that one up, and you'll be able to see it. It today matched the same high, not quite, the same high that we made back on the 5th of November. We went up and touched it by just a little bit, but did not go above it. Yeah, but it's still early in the day. We still got 4 hours of trading to go here, and we'll see that. Someone had a question about the market that we had in 1999 and 2000 when we had that parabolic move that went straight up. That was a totally different pattern, folks. That was relatively predictable, because what happened was we broke out of a long-term base. I forget the prices exactly, but the last 1,000 points in the DAX was in the NASDAQ was basically a moonshot, just straight up. And the Dow dropped in January of that year, and it was on March 24th that the NASDAQ finally topped. And it topped with a little butterfly pattern on the daily where it made a slightly higher high, just a shade under 5,000. And on that weekend, the Newsweek, Business Week, U.S. News and World Report, and Time Magazine all had a picture of a giant bull, as I recall, on the cover. It was one of those all three of the magazines, and it had NASDAQ 5,000. And the NASDAQ never got there. It got to 49 and change, or 48.90 or something like that. It missed it, and it never got there, just like what happened in Japan at 40,000 in the Nikkei Dow, and only got to 39,000 and change back in December of 1999. So whether those are historically significant or not, I don't know, but these T6 patterns are the best that Gartley had. It's not as easy as the Gartley pattern, because the Gartley pattern forces you, to trade with the trend. You're buying a higher bottom, or you're selling a lower top. That's really what the Gartley pattern is, whereas the T6 pattern is you're selling an exhaustion pattern. Now, sometimes when exhaustion patterns go berserk, they can go parabolic, but this market is not acting, that way, at least not yet. I mean, the NASDAQ has been the leader all the way up, and it still can't take out the highs of 5 days ago. What's wrong with that picture? And I'll show you a couple things that I think are interesting here, but whether that's the case or not, I don't know. But I have to, give you my best shot, because I've been doing this a long time. I feel very strongly about these patterns, and but frankly, sometimes they're just just totally off. Here's a statistic that's really interesting. Since we made that high on September 3rd, the market crashed down into that October 15th date. That market was down 18 days. Basically straight down. There were a couple of up days. I think we had 2 days of rally where the market would make a little bit higher high, close slightly higher, and then get hammered the next day. And since we've had this move up in the since October the 15th, we're now in the 18th day. So we're 18 days down, 18 days up, and we've only had 2 lower closes in this whole run here. And they made a higher high that day. So, I mean, it's basically had a higher high day or closing higher for 18 straight days. So you're down 18, up 18. So there's some symmetry coming in here. We have the Bradley models getting ready to turn sometime around the 24th of November. So maybe it'll run another 2 weeks. It certainly could. But all I can say is the technical patterns with all the numbers that I'm looking at are really telling you that there's some really big things happening in these markets that you don't want to get too aggressively bullish. We've got this VIX index going into new ground, new low ground also. So you want to pay attention to that. Now I wanted to cover the next one, which is the Dow Jones transportations. I'm going to do the transportations and the utilities because we are seeing these things, going up into these areas where they have been before. Now the transportations, I believe, have taken out the high of Friday, 89.60. Yes, they have. And so that's not unheard of because we're still in the top part of this triangle at the 1.27 level. And we want to put this one up here. Here's another one of the T6 patterns that is forming. Okay, the next one we want to take a look at. Take your time and take a look at some of these, folks, because you're not going to see this again, in my opinion, because of the fact that we are such at a big level. Now, the utilities still have not taken out the high that we made on the 5th. We're up strongly in the utilities today, finishing I think we're finishing. That's for sure. We'll take a look at it, and we'll see whether we get above the highs from last Friday. But this is another one where we've had, basically a straight up move into this like we had. Basil mentioned on the I should say Basil. Basil, I can't help but apologize to you, but being Italian, I say Basil more than I say Basil, so please take my apology very seriously. Okay, anyway, the utility has not made a new high as of yet, but it has completed the butterfly pattern, also known as that T6 pattern, and the 1, 2, 3, or the 3 drive to a top pattern. At the same time. That's why they're always, coming together at the same time that we have here. Now, we've had an interesting thing happen just in the last hour. I don't know if it means very much or not, but I wanted to show it to you because these are some of the things that I watch because we missed the relationship here in the S&P futures, because the S&P futures only made a higher high by 1.5, whereas the S&P cash went up and made a 1.618 to the almost exact tick. The number came in at 2004, and we had 204.00 as the 1.618. So that completed that. So we're going to take a little break here. The Dow's still up about 30, and we got gold coming down quite a bit, and we'll be back right after this message.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, and now we're going to talk a little bit about the IBB, which is the biotech index. As you can see, we've also had that T6 pattern form last week, and it has sold off a bit. We're up a little bit today, but not anywhere near the new highs as yet. That's still early in the day. We could certainly do that, I'm sure, but that biotech index has certainly completed the T6 pattern in perfect fashion, and whether that's going to make it go down or not, we'll have to wait and see. That's known as the IBB. We've already looked at the IWM, the Russell. It did go up and touch the high that we made last week, but it missed it by a little bit, and that comes in around 117. The next one that I wanted to take a look at, we've had a request to take a look at Apple, and Apple is probably one of the, all stocks with volume of more than 1 million shares a day are really good technical. Actually, 500,000 shares a day is really good. When I first started trading stocks back in 65, the biggest day we'd ever had was in January of 66, and that day it was 5 million shares traded on the New York Stock Exchange, and that had been the record up until that time. Now Intel does that much in the first half hour, I believe, so we've had a big difference of a move. But if you take a look at this Apple long-term chart, this is the long-term weekly, you can see that this has been split. You remember from we were at 703, and we split, I believe, 7 for 1. And so, but the numbers are the same. You just multiply by 7. You know, we had a big ABCD down into 13. That's when the stock got to 385. And from 385, we've gone up to a new high. But we've completed a 3 drive to a top pattern now. We've also completed the long pattern that we had going on for the last 2 years. That also came in at that $730 level. So Apple hasn't made a new high yet today, but it's still real early. But it's completing that major pattern as it did in 2013 when it made the butterfly pattern up at the 703 level, which we were looking at that particular time. So Apple, being a big part of the NASDAQ, has also completed this big pattern, just sitting there at that same spot that we've been at before. So we want to watch that very, very closely. Now, there is something that I wanted to ask you about, because I have looked at this. I've talked to some of my closest associates about what I think is going on. They don't know either, but I want to switch the talking here to Japan here for a little bit, because we've had a situation where they've basically devalued their currency against the market, and making the dollar much stronger against the yen. And what I'd like to show you here is really something very unique. I don't know the answer to it. I've asked some of my friends. I'm hoping someone at TFN can tell me. But basically, it's the ETF for the Japanese shares, the EWJ. And as you can see, they jumped up a great deal when this announcement happened on October the 31st. The market shot up. It did not take a highs out of June, whereas with the Nikkei Dow itself, made a 1.27 expansion of that, so it was far behind. But what's interesting is after the 2 days, the market for the ETF collapsed and did this on a very large volume on the way up, and then it broke down and smashed into new low areas. So we'll see what's on. Oh, we've got our first caller in. It's almost time for the break, so I hope he stays with us. William from Singapore, how are you, my old friend? How are you? I mean my good friend, not old friend.
Yes. I hope I can be a good old friend too. Okay, good morning, and you are not far from me in Sydney.
Yes, I know. We're only about 6 hours by plane. After you take a 15-hour flight, 6 hours seems like a puddle jumper. So what can I do for you, my friend? William, we're going to be on a break here, so stay with us through the break, okay?
Sure, okay.
What's your question, my friend?
Okay, it's on gold. It's on gold, and I was looking at the weekly chart on gold. If I were to take the low established on October 20th, 2008, all the way to the highest point, we are now at the 61.8% retracement. And it seems that it fits Gartley by pretty well. So I wasn't sure that, is it a possible likely bottom at this point in time?
Yes, I really think so. That was one of the things I was going to cover after the break, because I really like the way that gold is acting. The fact that we were able to get up to 1178 was really good. So we've got to take a little break here to pay some bills. Yeah. William, stay with me, and we'll go through gold together, okay?
Okay, thank you.
Okay, stay with us. We've got to pay some bills, folks. The Dow's still screaming, and gold is dropping.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back with William from Singapore. William, are you still with us?
Okay, I'm back.
Okay, well, talking about gold, I posted in the long-term weekly that you talked about where the Fibonacci ratio comes in at $1,160 per ounce. And as you remember, Friday, we had a $48 rally in gold. It went from $11.31 up to $11.79, and now it's pulling back to what I think is a 61% retracement of that. William, for the first time in a long time, I'm getting very bullish on gold. And I'm going to put a few charts in here to let our folks look at it. The first one that I posted in was the one for the HUI, which is the bulls and bears for gold. And as you can see, last week we made a 1.618 expansion, which is one of my favorite numbers, because if the market fails beyond 1.618, you are so totally wrong that you have to get out of the position. But this stopped exactly at that spot. Had a little bit of a rally and has been selling off today, of course, with gold down another $11.
Right.
If we take a look at the gold and silver index itself, the XAU, we've made a double bottom from 2008. I mean, you stop and think, this thing was trading around 78. It went all the way up to 207, and now it's back to 68 again. So we've got a double bottom in the gold and silver index that looks very interesting. So this is the time to be looking to buy gold, in my opinion, my friend. And I know that you like puts and calls a lot, so take a look at your strategies and see what might fit best with you using good money management that you do.
Sure.
Did you have any other questions about the gold? That's what silver looks the same, except silver is weaker. Silver still has a potential to go to $14 an ounce, but and if gold gets below 1130, it can easily go to $9.90 an ounce, because if we have collapsing commodity prices like crude oil and gold and silver and platinum, palladium, and everything else, and that continues, we could see much lower prices in all these things.
Right, because I also see that other than the Gutley's, patterns that fix in nicely, last week is actually, the hammer patterns, so it looks pretty bullish as well.
Well, we're trying to convince ourselves to buy gold. You don't have to convince me. It's everybody else you have to worry about.
Yes.
It does look interesting, though, from the long side. It really does. It's this is the first time in a long time. Last week is when I first started to look at gold from a buy point, because we thought that fib number was going to hold. That's double bottom in the index for gold and silver going back to 2008 could be a strong indicator. But if we go below 55, another 10 points down from where we are in that gold-silver index, this thing could just melt down. You don't really know. So
right.
The main thing is that nobody wants to buy gold now. It's just truly amazing. Unless you go to try to buy it physically in some of the coin shops. I love gold and silver coins, and if you look at them, boy, it's really hard to get silver coins anymore, good quality ones. They've just basically disappeared.
Right. Okay. Thank you very much.
You bet, my friend, and take your lovely bride out for some Duran today, okay?
Yes, I will. And I don't forget Sarah. When will we be coming to Singapore? I'm going to take you out for dinner.
We're not. I know she's still waiting for that, so just be patient, okay?
Sure. Okay. Thank you.
You bet. We've had a request to take a look at natural gas, and that has been a really explosive pattern these last few days that we were able to look at, take slight advantage of it. So it's really interesting where it is right now. We're down a little bit today, but we've had such a run in it that it's been quite nice to see it move. Let me get this up here. We stopped almost exactly at the 786. We missed it by about 4 cents per cubic feet. And but it looks like we're ready for a nice correction here. This reacted extremely well to the cold weather that hit not the Far East, but the eastern part of the United States. And we were up for, I think, 11 days in a row, coming off from 3.5 per cubic feet to 4.5, which is a huge move, folks. That's a very, very large move. Dollar-wise, it's over $10,000. So it's once you catch one of these, they can have one heck of a run, to the upside. So that's something that we want to look at. Okay, we got a call from our friend David in Clearwater. David, are you there?
Hey, how are you, sir?
I'm okay. What can I do for you, my friend?
Hey, I was wondering if I could get you to put the VIX volatility index up on an hourly. It looks like, at least on the hourly to me, like we might be coming into potentially, in this pattern, for whatever reason, I tend to overthink it, but it looks like potentially it might be coming into a 3-drive to a bottom, which might play out with the 5-point reversal we've seen. You know what I'm saying? We get complacency really low, 5-point reversals complete out on the NASDAQ and a couple of other patterns that we've seen. It looks to me like the final low might be, in, at least if this is a 3-drive to a bottom, at 1128.
Yes. Let me refresh this here for the last couple of days, because there we go. Yes, I see the pattern that you're looking at. There's certainly that could be it, but there's another pattern that I mentioned earlier in the show that to me is more important, because that VIX is not traded by the public very much. It really isn't. I mean, when you stop and think of what these other indices do each day, this is done very, very little. But if you look at the cash S&P, which is the most important of the things, because that's a real cash market, that's not futures driven, and that made a 1.618 expansion to the exact number. I mean, the number was 204 and it went to 204.04, and that should have taken the S&P futures, if it was doing it on a relative basis of 1-to-1, that should have taken the futures to 2,039, but they only got to 2,035. So I think you're right on here with this 3-drive pattern coming in at the VIX. But boy, this VIX looks like a dying quail. I mean, it doesn't have any friends at all.
Yeah, no, I hear you. Also, I've been listening, kind of tuned into your show a little bit late here, and caught the remainder of our last few minutes of your conversation on gold. And from a technical standpoint, it is finally, because I've been watching this thing like a hawk for weeks now. I've been waiting for it's the bottom end. It's the bottom end. And I thought the bottom was in a few days ago, when it made the 1.27 expansion down to the last swing point at about 1160, but then it just blasted through that.
Sure.
Yeah, I'm telling you, I'm going to dip my toe here, at least very lightly, just with one contract on the GC here, because it looks like it's making a 618 retracement off of Friday's move up. And we'll see, man. I may get stopped out again, but we'll see. I like what I saw on Friday.
That's why you have to keep trying, my friend. That's for sure.
Yeah, no, I hear it.
The risk here is really small, so this is where you want to look at it. So
exactly, and it looks like, just going back to that gentleman's comment from Singapore, I think it was.
Yes.
You know what I'm saying? I mean, we're a little bit below it, but if you just put the gold contract on a weekly, and I'm sure you're well aware of this. But, I mean, it looks like if we can get above that, 1178 swing point level of the last double bottom that it's made since 2013, we should have fairly decent, assuming, our friends in the Bank of Japan and Europe don't announce even more printing, which I'm wondering, Larry, they're running out of things to do, man. You know what I'm saying?
Well, back in the old days, David, gold would be trading at $3,500 an ounce if they followed the fundamental news, but doesn't do that anymore.
Yeah,
so because they're printing paper, and we'll see the old, he who has the gold makes the rules. Whether that's going to happen or not, I don't know. What's interesting about gold is on the last big correction we had, when we went from 1,085 an ounce down to 684 back in 2008, we had a 63% correction. It went to 0.63, not to 0.618, and that's what we've done so far. When we hit the 1131 per ounce, that was 0.63 from the high. So it missed the Fibonacci number by, what I think is quite a bit. So that's why I needed to see it to get above that 1160 again, which it did Friday. And now pulling back tells me that 1149, which is the 61% retracement of that $48 move that we had Friday, that's the one I'm going to buy. Because if I can get that one, I know that I'm only risking $10. And that will give me a, really good risk-reward setup if it does, in fact, fit that.
Right. And then, other bullish indicators too, taking everything you just said, and in addition to that, from a candle formation standpoint, we got a morning star formation, which is a very bullish sign. To Tom's analysis, we got wide price spread, accelerated volume retracement on the lighter volume. For the trend guys, where we're at, a little bit on Friday, we hit above the 9, exponential moving average. There's a lot of different ways to attack it. But it's showing some really decent bullish indicators. We can just get,
some buyers.
The dollar to do a retracement on it here. Get someone else to agree with us.
That's right.
And buy it. It's got the makings of a nice run. So we'll see how it goes. Larry, as always, thank you for taking my call. I greatly appreciate it.
My pleasure, David. Listen, good luck to you, and always use stops, my friend.
Yes, sir. Oh.
Okay, keeping our international contingency running, we got our good friend Mike from Thailand on the line. Mike, are you still there?
Yes, sir. How you doing, Larry?
Sawadee, my friend. Sawadee.
You're not going to get. Okay, I'll tell you in a minute. But before, you're not going to get me to speak the local language, because I think it's not the nicest. It's not the most pleasant language on the ear. How's that?
It is. It's very difficult to learn it and also to pronounce it. What can I do for you today, my friend?
Well, you talked about Japan, okay, and you said you'd like for somebody to tell you, why is the ETF rally in New York, and what were we down today on the Nikkei? I forget. I'm sorry.
I didn't follow it. It was too late for me here, so I didn't get a chance to follow it.
We were down like 100 points or so, I think. I'm just checking it right now. But to answer you wanted to know why we were down almost 100 points today. Okay, but on the Nikkei, but you said, so why is it rallying? Why is it rallying in New York? It doesn't make any sense. Well, I'll tell you why. What I think, and I don't ever like to be too short, but they're juicing these markets, and as much as I hate to say it, you know how bearish I've been, right, Larry?
Yes.
And they're juicing these markets. They're going to send these things higher. They're going to run these markets up higher, and that's why we bottomed in gold and silver. The gold and silver markets smell it. The volume has gone berserk in both gold and silver. So 2 weekends ago, that's when I said to myself, holy Christmas, I think we have a turning point here in gold. So I think your caller before, Dave, he's right about that resistance, about the 1179. We didn't break through there yet. We backed off, which I was hoping for, so I can buy more. But that's my comment on Japan about your question about why are they buying in New York, but we were actually down on the day today. Well, you watch tomorrow. You're going to see. You'll see a rally in Japan. You'll see a rally on the Nikkei tomorrow. What do you think about that?
Well, it could be, Mike. I don't know. I don't follow it that closely, but it's a much smaller market than ours, so I don't really know. I follow the currency a great deal, and I'm watching the Japanese yen right now because I think it's going to have some strong resistance at that 115 level. You know, we've just gone and matched the highs that we've made over the past few years at 786, going back to 1985 in the currency, you know, so we've been here before and sold off a great deal, doing it not quite the same way where they put in $8 trillion. But to me, the Japanese have made a very, very bad error from an economic standpoint, because history says that this kind of stimulus does not work. When you just print money and throw it into the system, it just does not work. I mean, it's worked for the stock market, but not for other markets.
That's exactly.
Yeah.
I'm sorry to talk over you, Larry, but you're exactly right. It works well for the financial markets. It doesn't go into the economy. It goes into the financial markets. And they were prodded, in my opinion, okay? They were prodded. The whole central bank conglomeration, it's a big club. I'll never forget what Randall Forsythe of Barron's told me one time. He said they're clubby. It's a big club. He told me that like 20 years ago, okay? And they didn't do this. Japan did not go at this thing alone on that announcement they made 2 Fridays ago. They didn't go it alone. They were told to do it. And anyway, by the club. It starts out there, and it's being backed up. You saw Mario Draghi's comments. He's throwing in his 2 cents for support, and this is going to continue. This bull market in stocks is artificial and rigged as it is. It's going to continue. And I guess that's.
Hey, listen. Thank you for calling in, Mike, and keep calling in. We always enjoy hearing from you.
Thank you, Larry. Thank you, Larry, for taking my call. Take care.
My pleasure.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, and we've had a question on currencies, and that is, would you be short the euro over the yen? And the answer to that question is, I think that's a doable trade if you want it. But I think the easier trade to do would be to look at the long euro and short yen. And the reason for that is the risk reward on that trade looks better than the cross rate of the euro yen in itself. That's the way it looks to me. In other words, we're right now setting at the 61% retracement on the euro from the low we made last Friday. We went down to 123.60, rallied up to 125.10, and now we pulled right back to this 124.20 level in the euro where it's sitting right now. We're doing the same thing in the British pound, which I like the best of any of the currencies right now from a short-term perspective, because we've made a big 3 drive to a bottom pattern in the British pound. I should put that in here in the room here to let everybody see it, because it's a very, very low-risk trade from this environment. The 61% retracement was hit on Friday, and now we're making the nice little pullback here. So that would be the one that I would be watching, from a standpoint of, a very low-risk trade with a good profit potential. All 3 of those trades look good because the risk on them is very, very small. The risk on your euro is about 30 pips, which is a little over $300. The risk on the yen is about 30 pips, which is $300, but the profit potential on both of those is, substantially more than 3-to-1, if, in fact, the pattern does complete. And we remember that these are, patterns. But I spent so so much time this weekend looking at these long-term patterns in the stock market and all the indices and the ones that I posted earlier. There were so many of them I couldn't post all of them, but I think I posted 7 of those T6 patterns. And, boy, you just don't see that many patterns at the same time. I finally think I know why it's different this time, and that is it waited for all these patterns to complete at once, because I think you're going to see history made here, folks. I'm probably wrong, but that's the way I look at it. Thank God you guys got Basil Chen in your corner and Steve Rhodes, to keep you a little bit of semblance of common sense, I guess. But these patterns certainly look bearish to me, and these are the ones that got me in trouble back in 1974, but not this time. So we'll see what's going to happen with it. We only need to close below 2006 in the S&P futures, and that's pretty much what we'll be looking at. I don't believe the markets are closed tomorrow because of the holiday, but I'm pretty sure they're not. They don't view that as important, whereas I think it is, but that's just me. So we'll see if that's going to be the case. The one other thing that you really got to watch, folks, is the currency markets, because if we have a currency war, in other words, they start throwing paper at the market and not back their currencies with any semblance of common sense, we could really have a bad time. I think the banks are closed. I'm sure the banks are closed. That means bonds don't trade very much, but they do trade the overnight session in bonds. So that's the reason why you got to pay attention to that. Bonds have done very little after we hit those big numbers, at the 786 in the bonds and the 618 in the notes. So we'll take a look at it. And it does look like we have started a currency war. And, folks, I will tell you this. I would rather have a little bit of gold and a little bit of silver on hand just in case, because if we ever go back to those rules that we had before, that he who has the gold makes the rules, this gold's going to go. And the easiest way to accumulate a very large position in gold is to get it to go down, because you can buy it all the way down. That's one of the rules they have if you got enough money. So who knows? So you want to keep watching the currency markets, because it's this is the real key to all this, in my opinion. Could have another day like October the 3rd. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.